Now, most of you already know that the cost of living in South Africa continues to be high. Things or products that we use on a day-to-day basis continue to be expensive to consumers. Now, you will know that obviously currently SA is sitting at a cost of living, or the CPI that SA is currently sitting at, it's 6.9%, which obviously we know that the SA Reserve Bank's target is to get, or is to see SA cost of living or CPI figures coming within 3 to 6%. That is their target, and meaning that the fact that this CPI figure, it is still at 6.9%, just means that it is still very high from the target that of course the SA Reserve Bank is of course targeting, meaning that we could easily see obviously interest rates, or the central bank continuing to increase interest rates, trying to curb this inflation. Now, you already know that obviously the more we see of course this figure being very far off from the target which the SA Reserve Bank is targeting, we see, or we tend to see, the Reserve Bank aggressively increasing interest rates, which that of course you already know by now that it has a huge impact in stocks, in banks. I mean, have a look at what is happened, or what happened in America on the Silicon Valley Bank. Due to the aggressive interest rate hikes we saw from the Federal Reserve, it ended up having a huge impact on of course big banks like the Silicon Valley Bank. And it is not only the only bank that is obviously struggling or having a huge hit due to these rate hikes, but it is also other banks that are obviously experiencing or having a bumpy ride in their financials due to the fact of the central banks or Federal Reserve increasing interest rates. Now, that situation which is happening in of course America, we could easily see it, or it might already be happening to some of the banks in SAs that probably maybe we don't know. But of course this increase in interest rate hikes, obviously that it's not good for banks, because then, or when you look in the loan segment, or company banks issuing loans to consumers become a bit hesitant, because now it is expensive for consumers to go and get loans from banks, whether for cars or buying a house, or credit card loans, because they know that in terms of the repayments are quite expensive. Then that occurs in banks not making as much money as they should, because obviously a lot of people are hesitant, even institutions are hesitant now to go and borrow money to grow their businesses, borrow money to of course expand their businesses, which is not good for banks. Now, banks are not the only institutions that are of course being impacted by obviously these, as I'm saying, institutions, or especially companies that are into the fourth industrial revolution, or companies that are investing in things that are going to be in demand in the future, like EVs, things like artificial intelligence. They find it difficult to expand or to grow their business, because ideally, or usually, what they do is that they go and borrow money to grow their business, or to invest enough money in the assets, or in products and services which they believe that they will boom in the near future, so that at least they can prepare and grow their business. But right now we are finding companies not maybe going out there as much to borrow money to expand their businesses, because they know that obviously interest rates are high. So this is also affecting companies that we invest on a day-to-day in the stock market, because in terms of growth, or what those companies used to do, and that is to go out and to borrow money from banks, they are a bit hesitant, or they are not doing it as they were, because they know that in terms of the repayments, they have to pay more than what they would usually pay for the same loan maybe 2 years ago. So yeah, it is not only banks that are suffering on these rate hikes, or on the rate hikes, but it is also other companies or businesses, and over and above that, as consumers who obviously can't now afford the loans that probably we took when interest rates were low. So yes, this is bad to consumers, or this is obviously not good to consumers and businesses. But of course, this figure that is coming out on Wednesday, which is the cost of living or the CPI figures, it is very important, because as soon as you can notice that analysts are expecting this figure to come at 6.9%, meaning that if we are to get this figure over 6.9%, that would be worse, that would be bad, because then that might of course result in, of course, the SA Reserve Bank again increasing interest rates, which we already know the damage that this interest rate hikes is doing to companies. So that would be bad. Whereas if you had to get it to come lower than what analysts expect, then that is good. That in fact might mean that in the next of course meeting, where of course the central bank or SA Reserve Bank meets to decide on interest rate hikes or interest rate decision, they might not consider increasing these interest rate hikes, or maybe they might even start to think about decreasing, which will be good, right? Which will be very good to also the market. So I'm hoping for the best, and I hope us to see, of course, this inflation or this cost of living figure, which is set to come on Wednesday, to drop, because that then will be good for companies, as that will maybe trigger the SA Reserve Bank not to think about increasing interest rates anymore, but to start thinking about decreasing interest rates, which we all know that that is bullish to companies, that is bullish to stocks that we invest in, as that would mean that companies can easily go and borrow money to grow their businesses. Companies of course can see themselves doing well in the near future, due to the fact that maybe they can get those loans at better interest rate. So I'm very excited, and I'm looking forward. So I'm very much looking forward to this figure that is coming out on Wednesday, as of course that will be the figure that obviously guides on how the SA Reserve Bank rises or decreases, or the SA Reserve Bank's decision when it comes to interest rates in the next meeting. Otherwise, on Wednesday we are also expecting to see, of course, the interest rate decision coming in the US, which obviously we already know that analysts are already seeing a 25 basis point increase in interest rates, which obviously if we are to get more than that, it is a bearish signal for the market. So as if we get maybe interest rates not increasing at all, or increasing lower than what is expected, then that is a very bullish sign for the stock market, which will then mean that of course those of you that are investing in the US can be maybe start thinking about buying US stock once again. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit the like button, comment and subscribe. And once you subscribe, don't forget to hit or click that notification bell, so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And before you invest, it is very important that you do your own due diligence, so that at least you can be comfortable when you are investing onto the stock market. Now, you already know that this video was just an entertainment video and not a professional financial advice. If you seek professional financial advice, you already know what to do by now, and that is you need to go out there and consult the professionals. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.